Hey, Trader Stephen Kowitzel here at thetradersplan.com. It is Friday morning, February the 4th. We're going to look at the overall market like we normally do on Friday mornings, and then we're going to look at the top ETFs of the week. So let's get started. Let's start with the S&P 500. We had a really nice reversal a couple of Mondays ago, right? You got a nice reversal day right there. It took last week, it took a little bit to get going, and then we had some follow through this week. So in the S&P 500, we're back above the 200-day moving average. Yesterday, the market got hit pretty hard. The Nasdaq was down quite a bit. The S&P 500 was down 2.5%. As it punched through above this pink line, the 20-day moving average. Now it's kind of back below it, but we're still above the 200-day moving average. So, I really have a kind of wait and see mindset right now. I know the Amazon earnings is really pushing up the Nasdaq today, but if you look at the equal weight of the QQQ, it's actually down on the day. So the overall market is still a little wobbly. So I'm going to kind of wait and see before I put more money to work. A lot of times when you look at the overall market and you get these strong recoveries, they normally never just V-shape straight out of here, right? It's not a V-shape. I wish it was, but it's not. It is choppy along the way, pull back, and we might even get this. So I'll just kind of wait and see right now. But, I have plenty of money that's in work, so I'm just trying to hang in there. And if the market, cracks a little bit more than it does, and if it continues to pop, then great, I'm in. So either way is fine with me, right? We'll just let the market do what the market wants to do and just follow a set of rules. So the Nasdaq is a little shakier because we are way below the 200-day moving average, which is the black line, right? It had a rally this week and then just a nasty sell-off yesterday. On Thursday, the Nasdaq was down almost 4%. Volume wasn't really huge, but it doesn't matter either way. It was still a pretty ugly day. Today we're up quite a bit, but again, you had the Nasdaq earnings. You had Snapchat, which isn't a huge weighting, but still could cause a little bit of confidence in the market. So it's a little choppy right now. So again, we are back below the 20-day moving averages. We got rejected around that line. I'm kind of in this wait and see mode before I get too aggressive. Again, I do have some money to work, but it's likely the market could chop around for a little bit. Let's just at least wait and see until Monday. And if the market does kind of pop Monday, then this could be a nice little pivot, nice little stop loss to put some when you buy some ETFs or some stocks like under Friday's low. Let's go look at the top ETFs of the week and see what is performing. What is performing strong today and on Friday morning, and what's performing strong in the week? Bitcoin is actually up a lot. I looked at Bitcoin futures, and Bitcoin futures are up about 9%. Now, to be fair, they're down over 50%, or at least this right here is. It looks like you got a nice kind of double top, and then you're really in this. You could call it a topping phase, or you could call it support. Either way, I try to prepare for whatever happens, and we'll just kind of wait and see. So Bitcoin is, again, this Bitcoin Trust is up a lot today, but it hasn't really signaled any kind of buy signal. It's just kind of bouncing a little bit. A lot of the risk-on assets, like some of the ARK ETFs, are up a lot today. So you have these periods where, like Monday and Tuesday of this week, you have the risk-on assets. I sometimes call it the triple C. You got the cannabis, the crypto, and the clean energy. They are all up a lot. And then they've been down a lot for about 12 months. So they were all up a lot for a couple of days, and then they get hit hard, and then they bounce back. So we'll just kind of wait and see on that. I'm not really seeing any buy signal in there, any real pattern. But if you look at the week, it's kind of interesting that the cannabis ETF, this POTX, is really up the most, up 9.4% so far week to date. That's Monday through early morning on Friday. That's quite a bit, but I mean, if I kind of stretch this a little bit and really look at this, I mean, a lot of the risk on the triple C's, I mean, they peaked last February. I mean, we are looking at exactly a year downtrend. It's been pretty rough. It really has. I mean, this ETF peaked at $29.50. It's now at $5. So does that mean it's a value buy? No, it doesn't. You can see there are a lot of false rallies, false rallies. This one actually broke through the 50-day moving average. And then right here we're just going to kind of wait and see. It's not even above the 50-day moving average. I mean, for these, a lot of risk on assets, you really want kind of a higher, you want an attempted rally, a pullback, and then a re-break. Kind of like Brazil last week, and we'll look at that. So we haven't seen that here. I mean, if you want to be super aggressive, you could say, okay, I'll buy cannabis as it breaks above this week's high, but you have to be prepared in case it's going to hit resistance at the 50-day moving average like it has so many times. Eventually, it will break through, and we'll get a stronger rally, but it's still in an overall downtrend, and until we see kind of a significant turnaround pattern, something different, then we really have to treat it as such. So you have to understand that any kind of bounce trades you play, that's exactly what they are, bounce trades, until we see a true trend reversal. So if we go to this carbon ETF, this global carbon KRBN, I mean, this was one of the biggest winners last year, and is really showing a lot of strength so far. So I don't really know how I feel about this. I mean, it's interesting because it has just been running for so long, and right now it is about 10% above the 50-day moving average where it has found support. I probably play it closer to the 50-day moving average, so I'd say this one is a little bit extended. Nat Gas has had a really, really nice run over the last couple weeks, really. Since the whole Russia-Ukraine scare, it's really pushed up the price of nat gas, which is not good for our heating bill. But if you play the UNG, it was up quite a bit, and we'll look at that here in a second. But this FCG, this is up 7.8% this week. It's a little extended, so I'm not going to chase nat gas right now. I do have a little UNG left. So a couple weeks ago when I said, hey, buy it as it breaks above this level, and I booked some profits in here. If it breaks really probably below today's low, I would just get out of this trade. So if you took advantage of this, you're very, very happy, right? It went from $14, it peaked at $19.50 a couple days ago. But a lot of times when you have these parabolic moves like this, sometimes it's just straight up. Sometimes I like to play the 8-day moving average. You can kind of see right here, it tends to work pretty well. And then a pullback, it works pretty well. So if it breaks, I would just get out of the nat gas trade and let that settle down for a little bit. So nat gas is definitely extended. Let's continue to look through some of these other ones. You have the mining. This one is still in a sideways pattern. Really doesn't look very good. It continues to try to break out and come back and try to break out and come back. So if it were to break out of this, I'd say the June of 2021 high, I would take it seriously. But until then, I'm not very excited. Cocoa, same thing, has a history of going nowhere. So this doesn't look very good. Even though it's up a lot this week, we're going to pass. China in a long-term downtrend. You can kind of see a pattern here. Yeah, some of the lagging ETFs are really leading this week. But there's one thing that's clear is you have a lot of energy that's up. And this morning I had to do a double take when I really looked at the price of oil. And the price of oil was $93 a barrel this morning, and that's a lot, right? That's not very good for the average American, but it's just the reality of the situation we're in. It's crazy to think that in March of 2020, the price of barrel actually went negative at one point in time in the futures contracts, but it's amazing how prices can change, and they can continue to go as far as we ever thought humanly possible, but. You have this IEO, and a lot of the oil ETFs are extended. So they're starting to get extended if you don't already own some. I think we own some XLE. So you can see a lot of these. The MLP this one's probably extended, even though it's trying to break out. That's a pretty bullish breakout right there if it's trying to break out. So it's kind of on that line. But I think support is somewhere down here, and a lot of the other energy ETFs are extended. So I'm going to say this is probably not a good idea to chase it. Same thing with XLE, right? It is extended. I wouldn't get sucked into really chasing it, no matter what oil or anything does, right? Nat gas, even though they look attractive, they're just, you don't want to chase them because you'll end up buying at the wrong time. Like you'll buy on this day and then you'll get slaughtered the next day, right? They get really, really volatile. So we're not going to do that. But we'll just continue to kind of look here at the top 10 and see if we can find anything. Find anything else. You can see that there is another cannabis ETF, YOLO, that is also in the top 10. Again, this ETF is in a long-term downtrend. It looks incredibly weak right now. So I'm not going to get involved in that, but it did provide, if you do believe this is kind of a little mini bounce play, and I would say if you are going to play cannabis, I'd let it break above this week's high, right? Let it break above the 20-day moving average, because it's not going to rally very far if it can't move above that line. So really, you have the cannabis ETFs that are setting up for a mini rally, right? But I would wait until they break above this week's high before considering getting in. You have a lot of energy that's also in the top 10, and they're just extended. So we're just going to hold off. In my opinion, not a lot of great setups. The market still is really chopping around quite a bit, and we'll really wait and see which way the wind blows. And I think Monday is probably the test. Like, are we going to try to retake the 20-day moving average in the NASDAQ? Or are we going to continue to chop around for a little bit? So it's okay to wait one more day, let some more setups happen, and then we'll go from there. I hope you have a great weekend. Thanks.